Hi everyone, and thanks Ian. We're now at the less formal part of our annual general meeting. I'm going to update you on the last year and more importantly, where we're looking to take Alkane in the year and years ahead. A reminder that you can use the interface to post questions for me, which I'll attempt to ask at the end. Although, as I often get shareholder calls and questions, I'll try and address them during the presentation now. So welcome, hope you're all doing well and hope the virtual format travels smoothly for you. Here's a disclaimer talking, of course, I'm giving forward-looking things that we can't be guaranteed. I encourage you to look at the full disclaimer in the presentation online. Let's take a moment to recap the last financial year that was. It's pretty good year, really, when you consider it. I know that during this pandemic period, often you think to yourself, oh, wow, what's going on? At least we certainly do, as we've been restricted in travel and we've been looking out for our employees and we've been adjusting the way that we work. But a very successful year. We started the year with a guidance of around 45 to 50,000 ounces production. We've ended up with 56,000 ounces production, and we've revised that guidance through the year. So a cracking result there from the team at Tomingley. At an all-in sustaining cost of $1,320 an ounce, which is pretty good, puts us in the lower half of Australian producers. We've had the Roswell and San Antonio resources declared. Since the end of financial year, we've actually gone on to declare reserves for both of those. Great resources. We've got over 1 million ounces there. So we'll talk about that a little bit further in the presentation. We put out late in the financial year in June, the Tomingley Life of Mine plan, which I'm going to talk more about. We're very excited to be able to significantly extend the life at Tomingley. Voda, of course, which has been a real excitement machine for the company. We've continued to learn a lot about that. We've done over 75,000 metres drilling there. I'll tell you where we're at, where we think it's going, and the drilling we have planned in the coming financial year. And of course, all of us that have been shareholders across the entire financial year will have looked with admiration at the new team at ASM forging ahead. It's been a very successful demerger and created a lot of value for Alkane shareholders who were shareholders before the transaction ended up with Australian Strategic Material shares. So let's look at the state of the nation as it stands. Well, we're in a good cash position. We've got, at the end of the September quarter, we've got cash and bullion of just under $120 million. Strong and experienced management team in place. We've been travelling well. And of course, I've mentioned the demerger of ASM, which, as it stands at the moment, there's over $1 billion of value realised through that demerger that people weren't seeing before. As a board, we decided to do that. We've now got in the position where I think I can say with quite a degree of confidence that we're going to have reliable long-term production at Tomingley. I've talked about last year's performance. Our guidance for the year that we're in right now is 55 to 60,000 ounces. And all through that Tomingley corridor, not only is it still highly prospective, but we've detailed resources that we think are going to fuel Tomingley for at least another decade. We've got Voda, which I'll talk about. Everybody can see that there's potential there to be a tier 1 asset. We want to expose and show that for everybody. That's why we continue to spend the company's free cash and capital on it. And last but not least, it's been a very interesting year for our strategic investments. I'll recap those later in the presentation. Looking very briefly, since last AGM, we're largely unchanged. Our shareholder base is pretty much unchanged, the board is unchanged, and our financial position is solid and remains solid. And I'll talk very briefly about the debt that's there when we come to the new equipment in the presentation at Tomingley. Here we are. For those who are new shareholders, Tomingley is in the central west of New South Wales, about 4.5 hours to the west or west-northwest really of Sydney, in a very prospective area with a long history of gold production and copper actually, but gold in particular, which is where we're at. So this is what the region we're talking about, and we're particularly talking about the area to the south of the Tomingley township. Here is a map of the Tomingley operation. Were you to drive through there, the Newell Highway, the black line down the centre of the picture, splits the operation. There's a tunnel underneath it. Those open cuts have been mined out, with the exception of a cutback we're doing in that pit to the north, where you can just see in the picture it says Coloma. And otherwise, we're underground. I'm going to show you pictures of that with quite good grades and strong performance. Then we've defined these resources at Roswell and San Antonio, which we're putting a lot of effort into developing and going through the approvals and consultation processes for that. And you can see that we've got over 1 million ounces there in resource. Now, one of the really interesting things about Tomingley, which people don't realise, is one of the reasons why we're ahead of guidance for last year is that our grades reconcile above our resource models, and we have a strong history of that. Over the life of Tomingley as it stands, we've reconciled about 10% roughly on average above the resource model that we headed into the project with. It gives us a lot of confidence. It means that we tend to meet or exceed guidance on the strength of the excellent operational performance. And so we're quite bullish about our prospects down at Roswell and San Antonio. And I think it's well worth noting the size of the resources that we have. So you note there, if you look from that Tomingley all the way down to Peak Hill, we've got over 1.7 million ounces in resource. And remember, I said we have a very strong history of converting resources into mined ore. But as well as that, our reserve is 700,000 ounces. And we think that that will grow. And I'll point to that as we come to later into the presentation. But what I want you to particularly note is, if you look at that area of Roswell and San Antonio, that is actually larger in size than the original Tomingley operations, which is why, as a business, we're quite excited by it. Here is the existing underground. That's the pits. The Newell Highway runs through that gap in the centre. What you can see on the right-hand side of the slide is Coloma, with Coloma 2 to its south. You can see the underpass that would head under the Newell Highway, and that's Wyoming 1 on the left, which is where our underground infrastructure is underneath. What you're looking at there in the goldy yellow colour is all the development that we've undertaken in the underground. And the dark blue is the stopes that we've already mined. You can see then here the existing stopes in the mine plan and some dark blue lines, which is further development upcoming. So you can see we've done a lot of development and put a lot of cash into expanding these underground areas. We're just starting to stope Coloma 2 right now as it stands. And the resources are open at depth. So we do expect to get some increases in mine life and production rate underneath the existing pits. So there's a lot going on at Tomingley, and a lot of development has occurred, and it's now a substantial mine that produces from underground at a run rate of about 850,000 tonnes per annum. We have been, and if you read the last quarterly closely, heard me refer to this, we have been significantly upgrading the underground fleet, from new loaders on the left, new production drill in the middle, new trucks on the right. You can see we have quite a substantial fleet, and that is why we've incurred equipment finance and some of the debt that you see on the very opening slides that I referred to. So we have equipment finance for these. What's the reason why we've done it? Well, one, when we first started the mine, we had a shorter mine life and we wanted to come into production for as low a capital cost as possible. We've done that. Now we're turning over the fleet to much more newer and productive equipment that we see will go out 4, 5, 6 years as we extend into the Tomingley Gold Extension project. That enables us to get better productivities from the equipment, and also much more reliable availability, which is really important when you are hitting a steady state, reasonable size operation like we're at. We have more equipment to arrive, and that process will be finished by early in the new year. To touch briefly on the Tomingley Extension project, and some of you will have seen presentations that I've done on this, but we show a life of mine out past 2030. And you can see in the top slide, I've taken the unusual thing for Alkane of talking about potential extensions. And if you notice some of the drilling that we put out recently, you will note that we have intercepts below the resource model at Roswell. We're quite confident that when we get underground at Roswell and we have underground drilling positions, we will be able to extend the mine life. We can't prove that yet, we can't pull into reserve, but we're very confident. And so you can see that we expect to ramp up through calendar 2024 to a 1.5 million tonne run rate, expanding the processing operation, open cut mines with an active underground at Roswell. That's where we want to be. We want to be above a 100,000 ounce producer. We're definitely there for those first couple of years. And as to what happens after that really depends on our success in the Roswell underground. That is quite an exciting thing. And we think we'll be seeing Tomingley operating for many years to come at a very competitive all-in sustaining cost. This is a picture of the Tomingley extension project looking from the newly aligned Newell Highway. So if you recall, the Newell Highway ran right through the middle of Roswell and San Antonio. The reason for that is, if you think back, many of these areas, 130 odd years ago were small surface gold mines, and they were connected by a road, one of the early, horse paths, and then that became the road. So it's not surprising that mineralization follows it. Nevertheless, it means that now to develop Roswell and San Antonio, we now need to move the highway, and that's what we're doing. What you're seeing in this picture is the realigned highway, and that would be the waste rock emplacement sitting to the south and slightly to the west of the bottom San Antonio pits in its final mine shape. This is part of the consultation brief that we have. So we think that that will cost us circa $90 million to do so, although we are already developing underground at the moment, which I'll talk about. And we're deep in the environmental assessments and planning process of that. We expect that we'll have submitted that environmental impact statement before Christmas. We're sweating on getting our gateway certificate, which is a process in New South Wales that looks at agricultural land use back from the government to enable us to submit the environmental impact statement. Then we go to public assessment in the first quarter, public display, which is then people give submissions on in the first quarter of next year, and then we enter the formal assessment process by the government. We expect project approval in the middle of next year, but that will be in the hands of others in the New South Wales government. Remember that we own the land underneath this, and we have deep involvement already with the government, and we've done a lot of community consultation. So we see no significant barriers to that approval. However, we are in the hands of the state government there, but we are currently predicting the middle of next year for that. And then we start to develop the moving of this highway. We start to do the preliminary works at the bottom of San Antonio, and we start the upgrade of the Tomingley processing plant. How do we expect to fund that? Well, at the moment, our CFO Jim and I are in discussions with potential debt providers as to how we go about that. We intend to draw down debt and leverage the company for the development of that. So here's some pictures of that just in section, and you can see the main reason I want to show that is to show the development already occurring from Wyoming down towards Roswell. We're about 30% of the way there. So you can see that's part of the yellow development, and then that's one of the early schematics of the Roswell underground on the left of the bottom picture. So we're probably 2-3 months of putting our first vent rise in, which was just to the southwest of the Miles United mine, this very historic gold mine that operated from the late 1800s, which is where our first vent rise is, and then on we go. So we intend to be able to mine Roswell underground with approval in early 2023. Leaving that, and I certainly encourage you again, if you've got more questions that you'd like me to refer to type them into the interface and so that I can answer them after this presentation. Now we move on to Voda. And again, I encourage you, if you have questions, not just for me, but for Ian Chalmers, our technical director, please type them in. This is a significant deposit. We already know that. The size and scale of mineralisation is quite substantial. We are drilling for knowledge to understand the scale of it. We're drilling to understand the high-grade core of it, and we're drilling to understand what's the structure and orientation of it. And I'll talk more about that drilling. But it's fair to say that our knowledge continues to grow, and our wonderful geological team there, led by David Meads, based in Orange, continues to understand more of what's occurred and lets us do better targeting and better refined drilling of what we're doing going on. So our knowledge grows as well as actually the size of the mineralisation. To recap, and I'm right in the middle of Voda itself, which is in the centre of the last picture. You can see some of the grades, you can see some of the holes, you can see the section. You can see that we have a central breccia that's actually breaking into multiple fingers as it approaches the surface, which is very typical of porphyries of this kind. You can see the copper within the ore body down deeper. And you can see the presence of chalcopyrite and some bornite within that. So this is a substantial system, and we are in the stages of putting together a resource model for it. I'll talk about the drilling that we're going to do and then the resource model. You can see the drilling we've got there, and that's from Voda 3 to the bottom of your picture, right through to Kaiser and what we call Duke, Kaiser Duke, to the northwest. You can see many, many drill holes there, but I encourage you to look at the scattered blue dots within the picture. It'll look better when you look at it, the presentation online. You can see just some of the drill collars that we've got planned over the next 12 months. And you can see from that positioning, we're extending to the south, we're filling into the high grade portion, and we're covering some of the gap between Kaiser and Duke and Voda. So that explains our strategy, which is to prove to ourselves and to our shareholders that we have substantial mineralisation here, to understand the economic potential of it, to understand the size of it, the structure of it, and start to put together a resource model for it, which we want to put out by the end of Q1 next year. And then from there, logically flows, what are the economics of this deposit? Remember that porphyry deposits typically mined around the world are usually large, very large, lower grade systems, and Voda is no different. We think it looks very promising, and we really look forward to bringing you more, and Ian and I presenting on it and answering your questions regarding it. It's a very exciting time. We turn now to our strategic gold investments, which, by any measure have been very successful for the company. One thing to note is, of course, we made these investments back in 2018 and then early 2019 at a different time in the market, at a time when developers were broadly unloved and found it very difficult to attract funding. But we were not of the same view, and that view has been borne out. So we look first at Caldas, where we hold a bit under 10% of that, led by David Reeves, and in development, more than halfway through construction up at Warrawoona, which is just a bit out of Marble Bar. We've been there recently, excellent camp set up, going gangbusters. So we think that they will be able to be in production on schedule early next year, which is what they've represented. And so we're really looking forward to seeing a lot more of their value represented as a producer rather than as a developer. Genesis Minerals is more interesting in that it's located near Leonora, excellent deposit, a lot of ounces, great results. And in this particular case, Alkane is a supporter of the transaction that's proposed and goes to a vote on Friday the 19th at Genesis's annual general meeting that sees Raleigh Finlayson, the former Saracen and then subsequently Northern Star managing director, coming in next year as the managing director of that company with two other new non-executive directors as well. So it's really a significant influx of capital, and then seeing Raleigh pick that company up and drive it for growth. And so we're a supporter of that. We'll be diluted through that transaction. And that's also significantly increased the value for Alkane and other shareholders. So where to for now in our investments? Well, we'll obviously continue to watch and monitor these two closely. But our thesis of finding assets that we think are undervalued and looking as to how we can encourage them through to development and potentially do future transactions with remains unchanged, and we'll continue to watch that. We, of course, balance that against the wonderful opportunity we have to spend our own capital on Voda and Tomingley. So what are our key priorities for the rest of the financial year? Well, it's not going to surprise you to learn that we're going to keep drilling at Voda. It's not going to surprise you to learn that we're going to pump out that resource and hopefully surprise and delight people. We're going to continue to do the exploration drive at Tomingley. We're going to put that EIS in and deal with concerns raised by the regulators and or other stakeholders, which we've been able to do very successfully to date. And then we continue to monitor our investments. That's our plan. It really is an execution and consolidation year for us coming forward. And we look forward to updating you on that progress. So thanks very much. Thanks particularly to the teams at Tomingley for production and in this very trying time, to our exploration teams based in Orange and to the corporate office based in Perth. And thank you as shareholders for being interested and remaining investors in the company. Hopefully we can answer your questions and see value and growth in the time ahead. Thanks.